This bull market cycle started 32 months ago, stemming out of the depths of the depression from the FTX collapse, the massive fraud case that we saw in crypto back in November of 2022. Now Bitcoin's up nearly 700% since that low, 32 months later. And we're beginning to hear all about altcoin season, and we're even seeing some of the strong alts run, obviously Ethereum being the main player at this stage. So naturally, things start to get crazy as we lead into the final stages of the bull market. Now, of course, there are a lot of new people that enter the space towards these later stages. If that is you, welcome. Like and subscribe if you haven't already. Hopefully we can give you something here that you don't necessarily hear across other channels, especially at these end stages of cycle. So without further ado, let's dive into today's video. We have a lot of data, a lot of charts to get through, and I've titled it something around it's getting crazy. It's these periods of the market that get absolutely crazy, and in particular, breaking out of a 7-year resistance level, coming back to test it 2 days ago, and so far finding ourselves closing above that level. This probably is one of those major pivotal points in the market. We saw it from Friday the 11th of July. That was when we saw a mass inflow of retail. Views had gone up, subs had gone up, and you can see all of those social metrics that have continued to go up in the space. On top of that, I'm getting the feeling that now isn't the time. It's not sexy enough to be in something simple, sensible, and consistent gains like we've seen with Bitcoin, 700% over the last 32 months. A lot of people are looking for these very, very fast returns. So I've got a couple of quotes to get through with you today. Now, the other thing that's getting a little bit out of control are price targets. I suspect they're going to get even worse. 30 grand doesn't seem so bad. I don't know if it's going to get there this cycle. I'm not betting on it. This is Ethereum in this case, getting to 30 grand this cycle. That would be a 10x, rough 10x from the current price. And then you got even more ridiculous price targets. This sort of stuff that you would expect further towards the peak are starting to show their hands now. Ethereum could hit a 100 bagger, 1.5 million. That would be from some of the lower prices there at $1,400-$1,500, but 1.5 million per ETH. Now, maybe they're talking about this cycle. Sometimes they go through and talk about it being in 2030 or 2040. Either way, it is absolutely insane, crazy type of headlines that we come to expect when we get into the final stages of the cycle. Now, Jesse Livermore knew about this. He was a gun trader in the 1900s, 1910s, 20s into the peak of 1929. And the crash. He made a ton of money and he lost it and made it back again. But what he said, what he learned about that period, Wall Street never changes. And in this case, we can see a lot of Wall Street getting into Bitcoin this cycle. The pockets change. The suckers change. Don't let that be us. The stocks change, as we've seen this time going from stocks to crypto. But Wall Street never changes because human nature never changes. And something people don't know about the 1920s bull market for the stocks is that they had far, far, far less regulations. This was one of those first times in history, going back over 100 years ago, first times in history that the everyday person could buy stocks. We often think, because it's been so long since this event in the 1920s, we often think that everyone could have bought stocks since it came out, since it was invented, since there was stocks on the stock exchange. But it wasn't the case 100 years ago. And it's almost like things today. We've got crypto. Almost anyone now can buy absolutely anything. And we're starting to get tokenized stocks as well, which now really allows absolutely anyone to buy anything. But 100 years ago, this was one of those first times in history that the everyday person could go out and buy stocks. And of course, we know what happened from there. Massive, massive move to the upside. Now, we're seeing further upside with the S&P 500. Yes, it hasn't hit a new all-time high today, but the trend is very much up. And generally, when it breaks out of the consolidation, especially as it runs into a new fresh all-time high and runs on a clear trend, it's Bitcoin's time to also run nice and clean. We've obviously seen this 2017 bull market, 2021 bull market, and 2013 bull market as the S&P broke out of the 2007 top. And this is something I've been following now for many months, almost coming up to years on the channel, I think the same thing is due to occur for the S&P 500. If it can break out of this logarithmic resistance level, that could also send the prices absolutely soaring. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. And this final leg of the market into these highs, so still everything looking quite bullish, we're seeing obviously more companies get into Bitcoin, becoming quote unquote Bitcoin treasury companies, essentially dead companies with their stock price going up because they hold Bitcoin and Bitcoin is going up. So they don't necessarily make the profits that the stock price suggests. It's that they hold an asset with that value going up. Is there anything wrong with that? Not necessarily, but it does lead to further leverage in the system, which can and generally does unfold at the end of the cycle. Speaking of prices going up, I think we've still got further to go, especially with the president mouthing off about firing Jerome Powell, saying he talked about of the concept of firing Jerome Powell, and almost in the same breath, he said, I'm more conservative than they are, basically saying, I don't think we're going to do it. So in one breath saying, let's fire him, the next breath saying, probably not going to happen. And that is leading to more volatility in the markets. Leading into this final phase of the 18-year real estate cycle, this is to be expected. This is the most volatile stage of the market. And what my theory suggests here is that we would see further downside for the US dollar. That's generally what happens in the second half of the 18-year cycle, second half being that last 7 years of the uptrend. And we've seen this multiple times with the US dollar coming right back down once it puts its peak in the first half of the cycle. So here is the peak for the US dollar. And over this period, coming sometime into the bottom, the collapse and then the low, late 2020s, maybe even into the early 2030s, we'd likely see the US dollar continue down. So I think this is good news for Bitcoin at this stage of the cycle. I don't know if Bitcoin's going to continue on for the next 5, 6, 7 years into a mega super cycle bull market. I would obviously love to see that, but I'm not counting on it. I'm counting on the US dollar continuing down. And in this stage of the cycle where Bitcoin's still heading up, I would still count on Bitcoin going up with the weakness in the US dollar. Now, on top of what's going on here in the US, something usually every single day with Trump trying to ruffle things up, we see the bonds continue to hold their ground. That continues to put more pressure on the Fed to hold the interest rates where they are. So we're seeing the 10-year yields go up. We've seen the 30-year yields go up, hitting 5%. We've seen the bonds continue to come down. Therefore, holding those bonds is obviously getting cheaper, but if you're holding them, then you're losing value in those bonds. And that can lead into a fairly significant problem for the US, sometime down the track, which could lead to this thing absolutely rolling over in the coming years. Now, the Fed is in a pretty much a rock and a hard place here, 4.5%. The market does not think they're going to get a cut at the next meeting in about 2 weeks. And as we've been tracking here, with all of these attempted, cuts that the market thinks is going to happen, we've seen all of these cuts roll back over into a pause or less of a cut. So the trend had been down, cut, cut, cut. That's what all these things are up here. And then as the meeting gets closer, we often see this blue rectangle move to the right and basically come somewhere in around 4.5%, which is where the current market is for that. So it's basically putting a rock in a hard place for the Fed, even though that Trump has been talking about slashing the interest rate by 3% down to 1% to save the interest repayments on the debt. It's as if they can't do it. So that's the important part here. Now, the other reasons why the Fed can't necessarily cut the rates, well, we're seeing, this is the interest rate here at 4.5%. We have the unemployment rate that ticked down a touch here to 4.1 over the month of April to May. Before it was at 4.2, down to 4.1. Also, the inflation rate is ticking up slightly higher here. This is year over year at 2.7%. And core inflation also ticked up from 2.8 to 2.9. It's not anything substantial, but when you're looking at an interest rate of 4.5% and the inflation roughly around 3%, there's not too much room to move, especially if Trump's calling for a 3% cut down to 1%. So I think all of this information is basically leading to a relatively strong stock market. Doesn't necessarily mean that the economy is in an absolutely fantastic position. It just means that the profits are likely going to go higher. Higher interest rates, banks can charge more. They have higher interest rate as well. Interest rates are essentially their way of making profits. It's going to be too much for a lot of people. But for now, the market is still suggesting that there is further to go until everyone gets absolutely squeezed. As we've been following on the channel by hitting the subscribe button down below, 1 out of 4 of you still haven't subscribed yet. Whether we're following the 5-year, the 20-year, the 40-year, the 60-year, there is still suggesting that there is further upside to go in this cycle. The 5-year reflects the COVID collapse, then the recovery from that point. The 20-year looks back at 2005, which led into that stock market peak of 2007. Now, I want to focus on the 20-year just for a moment here because things just don't go up in a straight line. The 20-year suggests that August could be a bit of a rough period. So come back to this video in August. We'll continue to update it here, which is why I suggest you subscribe. But August may not be just a straight up bull market for stocks, which might also bring in just a little bit of downtime there for altcoins as well, as I'll get to in just a moment. But that doesn't mean that it's game over. It could just be another significant higher low. You can see this high low forms in late September, early October. And then as you can see with the steepness of this line, it's almost as if it's off to the races in Q4 of 2025. So the 20-year cycle shows that. The 5-year cycle also shows something similar. However, it pushes the correction out to late Q3 and early Q4 before things are off to the races. It doesn't seem like the sentiment has become over the top yet either. There has been the odd occasion we've jumped to extreme greed. This is for the S&P 500, but similar situation here for cryptocurrencies as well. We don't want to see the sentiment getting too extremely greedy too quickly. Otherwise, we're at risk of burning out. We need as much energy in the tank, not getting too overly excited so that the market can continue on. And for crypto and stocks, it seems like we're at that stage now. Things could be getting overheated a little soon. It doesn't mean that's the end of the game. It just means we could get a correction which cools things off for a moment. And that's where price charts come into effect. Looking at the USDT dominance, so our stablecoin dominance, is there more room for money to flow into the markets? Essentially the liquidity game. I think so. Possibly about 0.5% to the downside. That's this number right here. Currently sitting at 4.3%. So for now, we've taken out that 4.4. That was one of those key levels. And 3.7 is the next target to the downside. So still room to move here. And it seems like ETH and some of those stronger alts are taking the lead while Bitcoin just pauses. And while Bitcoin pauses and the strong alts take the lead, that's what could lead to the stablecoin market basically finding its rhythm between 3.7 and 4.4. Now, if it remains in this zone, this is where things get a little bit scary for the altcoin market. We do need to see this continue to break down and more of that money flow out into the entire space. If it remains here and starts to track back up, not the end of the world. Hopefully we find resistance. But if it does start to break out to the upside, it could almost spell that things are over, that it could be game over. Long way off from that point, so let's just focus on where we are now, but just reminding ourselves that all good things do come to an end. The good things are potentially just getting started, and I want you guys to be making profits just like our traders are doing in premium. Congratulations, $400,000 US profit in the month. Other big gains here as well, 80, 50, and sometimes there are losses. So if you want to check this out, link in the top of the video description for TIA Premium, and you'll also get the 3 weekly reports. Bitcoin Spot ETF flows or net flows are still looking okay. We only saw a spike on the breakout, which isn't a bad thing. It's when we start to see spikes towards peaks of the price chart. That's after it's been going on a trend already. You can see the orange line in the background, the trend had been up, and then we start to see spikes in the ETF flows, basically the latecomers to the game. Whereas this time we had consolidation, smaller inflows, and then on the breakout, we saw the volume come back through. So that has been a good sign here for BTC, even if it is consolidating at the moment. And in terms of the exchange volume, we've also seen that continue to rise. Remember, we've been watching this now for months, looking at the potential of consolidation before we get the breakout. And at the moment, we're just about to break out from this top here at around $64 billion. So another good sign there for the crypto market. In terms of liquidations, we are flushing out the liquidity or the leverage liquidity in the market day after day, $500 million in the last 24 hours. And over the last couple of weeks, it's mostly been the shorts that have been getting wrecked here. So not a bad sign for the bull market either, just continuing higher there. And more on the sentiment, Google Trends continues to climb higher here. Google Trends is still the leading space to identify where things are getting searched. AI has not taken this yet. I often hear that comment as well, but it's not there yet. Maybe one day it will be. This is still a very reliable indicator, looking at crypto climbing high here at 32 and testing the previous highs of the last few days. But this is one of the highest prices here for crypto over the last 90 days and looking at over the last 12 months. Also in a very good position here, climbing higher, breaking previous highs. Total crypto market cap did hit a new fresh high yesterday, but today we got a new highest daily closing prices. As you know, I'd like to see at least 3 of those in a row to increase the probabilities that the market is going to maintain here. All in all, it is a good sign that we're holding above $3.6 trillion, above the 50% extension. In this case, I think there's a much higher chance that we run to 4 trillion. This, if it sounds like gibberish, is bullish. We're seeing further signs that the market does want to run a little higher. It doesn't mean it's going to happen in one straight hit. And if you take a look at the time frame it took to go for the first run from 2.3 trillion to 3.5 trillion, so that's a $1.2 trillion move. That took 6 weeks, so 42 days. So don't worry if there's a few days down here. What we do need to worry about though is if there's any closes under previous resistance levels. The price, the number I'm looking at there is roughly around 3.4 trillion. If the market comes back, closes under 3.4, that would be a slight cause for concern. But for now, keep those bull hats on. The wave count still intact here. I'll continue to update this in the next videos. Not much has changed since yesterday there. Total crypto market cap, this one here is looking nice and strong. We're seeing the craziness begin here with the breakout above those highs there at $950 billion, as we've been covering now for months. That has been one of the key levels because it was the previous tops. So this is for everything excluding Bitcoin and ETH. You can see all of these previous highs. That's good news there for altcoins, higher low formed, and potentially something in this sort of crazy space if the market maintains above $950 billion. So including the stablecoins looks like a much stronger chart and the top 10 altcoins excluding Bitcoin and ETH. But if we take out the top 10, Bitcoin, ETH, and stablecoins, then we get a much different picture here. The others chart has just been rejected at 7.75%. You guys know we're following and waiting for an 8 to 8.1% rally, and that would give us our first overbalance in time and price. So although altcoins have been up, we still haven't seen the follow-through strength similar to what we saw in May. So not to get too excited for the rest of the market. Yes, there are going to be gains there. Yes, you're possibly making some good trades. Congratulations. We're just waiting on the technical indicators to tell us about an overbalance in time and price. First figure being 8 to 8.1%, and then we'll be watching roughly around 10.5%. In the meantime, plenty of good trades. Like you can see through here, lots of good trades there. But for a buy and hold strategy, that's where things get a little more difficult because these are quite quick moves. So if you're already trading, good stuff. Now, Ethereum has obviously been the talk of the town in the last 24 hours and obviously the last week as it's climbed from 2,600, it broke our 2,900 level. So there's much bigger chance that we start to run towards $3,600 as well. At the moment, just taking a bit of a pause here at 34, you can see the previous top, so just a little support and resistance level. But overall, if it is consolidating above the $2,900 level, much better chance that it runs to 36. And then eventually, if we can take out these tops at 4, we'll be looking at roughly $4,300. So a pretty big move there. Although I'm not calling for a $1.5 million ETH, nor do I think it's going to get to 30K. Maybe there's a chance for around a 15 to 20K this cycle. But even then, I'm going to come back to the chart and just follow what the chart is doing. If we start to see resistance at 4K and it really come back down hard, that could be an issue. But for now, don't worry about that. To give us that leading indicator for the market, currently 3 months up. Now, the other thing that we can do with the indicator, the Gann Swing Pro, is take off the bar count and look at the percentages. So the percentage move in this swing so far has been nearly 150%. For this entire cycle of ETH, the biggest mover is 170%. So we're not far off the biggest swing. That doesn't mean that the cycle is over. It just means that it might need some time to rest, consolidate the move, which is healthy for the bull market, and provided it breaks out again, then it could go on another run. And we can see the averages. So taking a look at the average range, because we've changed how many bars it's looking back over the course of history, we're looking at a rough upswing of about 100% and a downswing of about 48%. So that's just over the course of those last 10 or 20 that we had a look at here. For ETH, should it get up to that roughly 170, somewhere around the 4K mark, naturally we'd find resistance there. A 50% move to the downside could still take it back to 190, but that's just the average. Then we've got to look at the other previous support and resistance levels, and we can look at some of the shortest, lowest corrections that ETH has seen. 21, 24, 25. So we get to the next natural resistance level, somewhere around $4,000, come back about 25%. It still sits us above the 50% level. So any sort of natural healthy correction above the 50%, $2,900, things are still looking pretty rosy here for Ethereum. And the other thing is still looking relatively good here for ETH is its ETH BTC chart. It has now rallied above the first overbalance in time and price area. That was this, looking at the market moving higher and for longer than the previous moves since roughly around early 2024. So they were the biggest rallies that we had seen. Now, next on the menu is to come above 0.032. So provided ETH gets above this 0.032, then we're looking even stronger. Then we can start to tackle the 4%, the 5%, and the 5.5%. Now, an absolutely macro, huge bullish move here for ETH. Not that I think it'll get back to or get to $1.5 million, but it could get to that 30K level, is if we start to see ETH break above 5.3%. So this is the 50% level here, and this would be the macro overbalance in time and price. That's this range right here. So far, this has been the largest range against Bitcoin that ETH has done. That has to come together above 5.5, 5.6%, and Bitcoin needs to stay in a bull market and continue to move higher for ETH to get to that $20,000 to $30,000 range. So two things have to come together. ETH needs to get above 5.5%, and Bitcoin needs to remain in a bull market when it does do this. If not, it could be in a bear market like Bitcoin was here. That's June, July, August, September. That is through the bear market where Bitcoin was bouncing around. ETH was starting to head higher. So that's looking relatively good there. And XRP also finding some resistance here at $3.10. That's the previous 50% level of the extension. So overall, things aren't looking too bad. It might need a bit of time just to digest the significant moves that the market's gone on over the last couple of weeks. But apart from that, I'll just be waiting back and not having to do too much at this point. Now, the last thing I want to leave you with is a slight rant on the bullish side of things. And if you made it this far, thanks very much. Like, subscribe. The fraud cycle follows the financial and business cycle with a lag. I would say, and I think a lot of people others would say, we are in a bull market. The markets are heading higher. If I could show my other chart here we are into these tops. And this quote here is suggesting that we're going to see more fraud come out. We've already started to see a lot of that fraud. Yes, we've seen presidents put out meme coins, and this is not just the US president, you saw it in Argentina as well. And that is as bull markets go on, people's sense of disbelief is reduced and they begin to believe things that are too good to be true. It's human nature, and bad people take advantage of that. So again, the fraud cycle follows the financial cycle. As things go on, as we know, we continue to lead further towards the peak, and I'm still bullish. I still think the markets have got further to go. We often see this fraud cycle follow the financial cycle. And being in crypto, or primarily Bitcoin and crypto here, as you a miner, I guarantee you will definitely see this. I mean, that's a pretty safe forecast, isn't it? There's often fraud that is in the crypto space, and it's probably going to get even more. All right, guys, thanks for joining me. Like and subscribe. I'll see you guys back at the next video. Until then, take care. Peace out.